Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is the 27th of August. We're hanging out on a Tuesday. It really feels like a Wednesday to me, but it is actually Tuesday, whether it feels that way or not. And welcome out, everybody. Great to see you as always. Hope you had a great day both in and out of the market. Once again, just a voice on the other side of the machine as I now try to figure out how to buy a good webcam and make one work. So that'll be those of you who know me well know that that is going to be a few minutes to figure that one out. But we will get there. Pretty interesting day in the market. All the follow through that we saw off of that big, last 15-minute closing candle from yesterday. Really was all in the after hours market. Basically, we gapped up on the open, sold off pretty dramatically throughout dramatically might be a stretch, but fairly aggressively throughout the course of the trading day. And welcome out, Patricia. Great to see you. I hope you're doing well. Certainly interesting day in the market. Hi, Julia. Great to have you again. As always, hope you're doing well. And welcome to Team Tackle. I see you a lot in the various shows. It's great to have you here with us. Welcome, welcome, welcome. After gapping on the open, I mean, it really was just kind of an immediate, not today. We're still in that range, right? And just drift. The first half of the trading day, very heavily focused on the bearish side of things. We did catch our footing towards the tail end of the trading day, bouncing back up. We still find ourselves smack dab in the middle of the range. Interestingly enough, if Coach Mark was here with us, he'd probably say, see that 20, that first test of that 20 SMA slapped us down. I know him well. And welcome out, Ilka. Great to have you, sir. And Fortino, always a pleasure to have you with us as well. Still just another day in the trading range. We're back, we're fourth, we're kind of thinking fairly delta neutral, right? Cash flow strategies, at least that's where my head continues to be as we continue to do our little dance. One of these days we will come out of the trading range, but today was certainly not going to be that day. Some interesting things going on. I guess before we do that, really quick on the earnings side of things, not a big stretch. We've got an Autodesk and a Hewlett Packard coming out here between now and tomorrow's open. You also have, oh goodness, who was the other one? Just a couple of S&P companies are reporting here. Autodesk, Home Depot, or Hewlett Packard, and see if I can actually tell you. I'll tell you in a second, I promise. Now I just have to find it. I should have had that page open first. Oh, Brown, Forman, and Tiffany's and Company. So there we go. I knew we would find it. So pretty mellow on the overall on the earnings side, unless we're trading those companies. Not a heavy duty earnings day here. So again, same as always. We've got a pretty good level of support around that 28.20. I'm calling it 28. That is where I'm going to stick with that. The old number, the 200 daily, the 50 weekly, the 200-day moving average, everything's kind of lined up right there. And hey, welcome out, Emily. Great to have you here. It's really weird to kind of flip-flop computers. I have to turn my head the other way. I've not figured out this whole I'm a routine creature person, that is for sure. Do the same thing over and over and I'm good. You change it up a little bit, I'm completely thrown off my game. So, but we're going to hold 28 as our support level, in my opinion, and resistance basically got to get back above the 50. Right now, we're kind of stuck in no man's land, back and forth. Very interesting area, market for, theta trades, for out of the money credit spreads, and for day trading, a little tougher on the more traditional swing trading, I believe. And that continues to be kind of where we're at. Very similar scenario as we've come to know and love about the Dow Jones. Basically, it's the same chart, just a different ticker symbol, right? So still holding out, seeing some definite negative momentum here today, but as long as support's holding, I don't think we want to get ahead of ourselves until we get a break one way or the other. Back and forth. A lot happens, but we go nowhere, has kind of been the story lately. Over in the NASDAQ, the little bit different. We do have the upward trend line that continues to hold for the time being, at least. So that we do have that positive. Still need to see a break to the upside to get that bullish signal in my mind. Break of the trend line could be an aggressive sell signal, but I think, knowing that most likely the Dow and the S&P have still held support. If that trend line were to give out, would maybe give me pause of calling it a tradable signal, but certainly wouldn't be a bullish signal if we do fail this, ever so slight developing upward trend line. Now the big one, the rut. This one's going to be interesting. Tomorrow's opens, in my opinion, very important for the Russell. We are right back at support here today. Day of heavy selling. Certainly no bulls in sight here today. Looking at the intraday chart, big drop like the rest of the market. We're able to hold that support level for the close. Definitely going to want to check this on the open tomorrow, in my opinion, in particular if we're thinking about managing our condor trades, as we've talked as coaches, myself, and I've heard the other coaches say it too. If that support gives out, there's just not a lot. We've seen that weekly 200 that's in that 1400 area, and I do think we can look at that as a potential support catalyst. That is basically it until we get to either our trend line or our pivot low, though. So I do expect if we do break, like always, that we're going to see some downward movement. We haven't closed today, right? It was ugly. It got there. It's not a very encouraging candle, but neither was this one, right? Neither was this one. So, support does hold. Downward movement, though, that is definitely something that I think we have to respect. A lot of empty space, not a lot of support to tempt buyers if we see this support level go, at least in my opinion. So that's where we find ourselves from an index perspective. Not a lot has changed on our sectors from yesterday. No real turnarounds or anything like that. Just another rough day over in XLB, in the materials sector. Continues to be fairly weak. I believe it was FCX, if my memory serves, breaking just another level of little intraday support, showing a tremendous amount of weakness. International flavors just continues to show tremendous weakness, a little bit of a almost a bearish engulfing candle on that side of things. Big downward movement on international paper. Old C over here caught these guys early today as they were kind of testing. They've been testing the support level. Not a great look. So still very skewed to the weak side. Or to the bearish side in this space, still holding up all right. Saw some nice upward movement on an Echo Labs here, as you can kind of see. Uh, SHW. Take a look at them. Still in a pullback phase. I don't think you could argue it's quite there, but I do think you could, start to think, okay, well, is this a potential bullish retracement? Let's zoom in here a little bit. We've hit a little bit of a bottom on the hourly chart, broke through some resistance, probably need to take out today's high, and that kind of is probably going to need a few days. I'd like this average, this 50 hourly, to kind of scrunch down and break through it all at the same time. Thinking out loud there, kind of how I like those type of pullbacks. But beyond me, I mean, certainly we are holding up from that perspective. Overall, though, again, we continue, I think, as we look through this sector as a whole, there are some interesting things on the bull side. I really do believe that, Sherwin-Williams, a little more development could be a really interesting trading opportunity. It's certainly skewed to the bearish side, and that is certainly reflected in that ETF. You could argue below today's low would be an aggressive entry to the bear side, or below the swing low from or last week's low could be that signal as well. Breaking trend, we do have a little bit at 54, as you guys know, made more stronger, at least in my opinion, at 52.50, but still very skewed to the bearish side. Although there are some interesting bulls out there, I believe, in that space. Energy on the other side, just pretty much skewed to the bear side, as it continues to be one of the most bearish sectors out there. A lot of selling here today, much like the market, just was not able to hold that opening gap, working right into a support level ExxonMobil is lining up very, very close with what we're looking like here on XLE, got a support level, and then not a lot for a little ways to go. I continue to, think that this is a bearish place, or it's a place that we're avoiding. Not broke through any resistance for months now, making lower highs and lower lows. Hey, we held support today, so I guess we'll give the bulls that. But if that gives out, and I would expect that's not a particularly strong level of support, I expect more downward movement. Really, we don't have anything until we get into those mid 53s. And there's just nothing there from a historical perspective, at least. And we've looked at all of these stocks so many times. They're running the same situation. You have SLB, who kind of rallied into that breakout point, now kind of testing that support level or that recent swing low here. That's an ugly, ugly weekly chart, right? Zooming this guy back, that is a major break of some historical support, in my mind, at least on SLB. A break below today's low, just another bearish signal, and it goes on and on. We've looked at a lot of these. I know you've looked at a lot of them on your own, and I just can't see how anybody could think anything but bearish right now on energy. Got to break resistance, which is going to put us up here at 58.60. One thing that's nice about using my good computer is it's so much bigger and so much easier for me to see. I was using my laptop on the flip flop, so it's really nice to actually see the number about 58.60 here. That is where resistance is. As long as that is resistance, I think we have to stay skewed to the bearish side. Financials, we are knocking on the door of those banks. We really are. We've talked about them a lot, because they're important. They're important to the financial sector. They're important to the market. They're certainly important to this ETF. Hanging by a thread on JP Morgan. Will it hold? It's held so far. Hanging by a thread on Bank of America. Will it hold? Well, I guess we're going to find out really, really soon, I guess, if nothing else. Citigroup. So, I mean, the list goes on and on and on. You got our US bank here that failed its trend, hanging right at its, a little bit different looking chart, but hanging right at support nonetheless. So it's just over and over. We are testing support in these big, big names. We continue to see mixed signals, some strong, some weak in the insurance. CB, for example, holding up pretty nicely here today. HIG continuing to hold a very nice upward trend at this point in time. Little more neutrality in something like Allstate, a little bit more bearishness in something like an Aflac or in a Lowe's. So, we talked about it yesterday. We're really starting to see some divergence in the way that these insurance companies are looking. One thing we are still seeing, though, is a tremendous amount of strength in our our exchanges. CME knocking on the door of a breakout. I mean, how do you not like the way that chart looks? At least ICE, maybe even prettier, knocking on the door of a breakout. So it really is the banks, the banks in my mind that are leading this right now. I think this support level is very, very important personally. If that gives out, I 100% expect that it takes our 26 support zone out with us. And I honestly expect that we're probably pushing 25 before we start to catch strong levels of support. So whether we're support bounce players or breakdown players, we're at a very important price point, I believe, in the financial sector. You can say basically the same thing for industrials, and I have, right? So, little messier chart, little cleaner breaks that we're seeing, I believe, on the financials with the banks, because we had this one weird day, or this one weird period. I guess it was more than one day, over in the industrials, still holding on to that support zone. I do believe our true bear signal would be the break of the pivot. I think we can err on the side of caution. We have so many breakdown bearish type of trading candidates out there. I don't think we have to settle for second best right now by any stretch of the imagination. We do have a knocking on the door, or have already triggered over on breakdown on FedEx here, breaking below this support level here today, closing below that support level. Downward movement tomorrow. I would definitely call that confirmation personally, at least. So we're already seeing some things starting to break to the downside. Again, I'll stick with what's been working well, and that has been defense on the other side of it, on the bullish side of it. really like some of these defense companies, probably like LHX the most from a technical perspective, although a little trickier than say Lockheed on the options. If we're trading options, Lockheed's a little friendlier, I believe, to trade than level three here. But a very clean breakout is actually starting to develop. We still got some work to do. Haven't done anything yet, but certainly, the defense industry has been very strong, has held up very relatively well, I believe, as of late. So I'll continue to look on that side of things. We also, let's actually sneak over here, take a quick peek over at cat. We looked at these guys on that longer term time frame yesterday, but I think it's worth doing again. We are right at this old support zone. I don't think you could probably argue, you have to forgive my crooked line, probably need to zoom that down here, take out these lows in that 200 weekly, but that is a lot of history that we're kind of fighting or testing right now on cat. 200 weekly, of course, can act as a support catalyst, but even if it doesn't, or you don't believe that it does, we've got a old breakout point, major breakout point. I mean, that was a major break on cat, big bounce. We've been hanging there for a few weeks now. 200 weekly to boot. That's a very important support level, I believe, as we look at our old friends in CAT. We've seen UTX continue to do this little bit of a dance too, much like the sector overall. So again, all of these more defensive areas, we might find pockets like the exchanges, like the defense industry. So there are certain industries that have held up better than others, but these more aggressive sectors overall just look more and more, weaker and weaker every time you look at them. 3M knocking on the door. I think they probably hit a new low here today, new 52-week low. Just a ton of weakness in the industrials, but a lot of support. A lot of these companies, whether it's at a major level of support like CAT or just the swing low, or a little bit that's kind of developed on UTX, we are seeing a lot of support. We're in important places in a lot of things in the market right now. Tech, very much like NASDAQ, holding up that trend line, selling off here today, holding up. We have created higher highs and higher lows. This trend line is very important on this tech ETF. I don't know how important it is on the NASDAQ, but I believe it's pretty darn important on the tech ETF. If that gives out, I expect an easy path back to support. If that holds, well, we can go either way, right? We can continue to work. We've got some room. We're kind of in the middle between support and resistance right now. Of course, the semiconductors very sensitive to trade war stuff, as everybody here knows. Still, overall, I like where the sector ETF is, but I don't really love where many of the individual components are personally. Mastercard notwithstanding, I think we are developing potentially a really interesting cup and handle. I know we've looked at these. We'll probably look at them every day until they're either are knocking on the door of resistance or have probably broken this support level that we put in on early in on Friday here. That's an interesting breakout, and I'm kind of just thinking ahead a little bit. Cup and handle, maybe we've still got some time, we've still got some work to do, but a big old cup and a little handle, question mark, right? So we're gonna have to wait and see. But I do think that makes for an interesting candidate. Tech has held up relatively well. One of the few areas that we did see something actually break resistance, create higher lows. Still a lot of work to do, and I have a hard time believing it can lead or it can do it without the market moving to the upside. We will have to see. Staples, just much like the rest of the market, kind of sold off here today. Continue to like where we are on the staples overall. You have Coke knocking on the door of a breakout. I can't remember if Coke is stock or options report this week, one of them. And Coke can go either way, right? We can play stock, we can play options pretty comfortably, I believe. Knocking on the door of a little bit of a breakout. You have Procter and Gamble, maybe not quite as clean, or maybe I guess it depends on you. Other than this one little, after we gapped up on earnings, the tick, as Maddie would say, as Coach Matt or at Tackle Trading, that annoying tick right there, notwithstanding a little bit of a cup and handle over there as well. I continue to be pretty consistent. I feel most comfortable on the bullish side looking to things in these more defensive areas, not 100% opposed to the more aggressive areas, but not going out of my way. Staples I continue to like, maybe kind of developing its own weird and ugly because of Friday cup and handle. Maybe that's where we're going here. Friday's low, certainly a level of support that we can keep an eye on the ETF. A break below that, I don't necessarily think I would call a sell signal, but I would call I would call it a sell signal. I just wouldn't call it a tradable sell signal, if that makes any sense. Utilities gapped up, held pretty nicely early in the trading day, kind of a little bit back and forth. So outperformed the market after the gap, but ultimately did give way a little bit on the intraday. Nothing I can say about utilities that I've not said many, many times, and certainly lots over the last couple of weeks. It's bullish. We're hitting highs. Things are breaking. Even old Duke, who was kind of a laggard for a while, within within the utility sector, it's hit a new 52-week high today. Looks like it came off that high pretty nicely, but they certainly have not been, I mean, not been poor or anything like that, but maybe not as strong as some of the other utility stocks. So just a tremendous amount of strength continues to be in the utility sector. It just really comes down to, am I looking for new entries? While we're up, kind of floating above those moving averages, probably looking to breakouts. If we pull back down towards the breakout point, the 50-day moving average, the rising 20-day moving average, then I will look to pullbacks. But certainly an area I think we can continue to like. A lot of selling in healthcare. I continue to just not really like healthcare at all. We saw quite a bit more selling in our plans. We saw that weakness come in last week, and it has really followed through. Humana, one of the biggest losers on the S&P here today, taking out basically everything. They were not too long ago working into some resistance, but that was some old stuff. UNH probably a little easier to trade. We looked at this one last week when they first broke through that support level, continuing to show a tremendous amount of weakness. Cigna selling into some support here. I think I can get rid of that right there, selling into some support. So it'll be interesting to see if that support can prop it up. Very weak over in the healthcare plans right now. Same thing on the drug manufacturers. I always get the wrong one. Nope. I knew I was going to do that wrong. MCK McKesson, another big loser here today. Some of the manufacturers really were beat up pretty heavily here today as well. J&J, of course, a lot of volatility after the lawsuit that went against them. Gonna have to let this one play out. Still, potentially a breakout candidate. Still right in the middle of the range. It's rocky. It's rocky out there. About the only really clean chart, and even that is a little toppy in my mind, is Merck. We do have a nice breakout pattern developing over on Merck. I continue to lean to the bearish side, but shy away from the healthcare sector overall right now. Those plans showing tremendous amount of weakness though, and it just seems to be picking up and up as they work into some support levels. So that's going to be an interesting one to keep an eye on over the next couple of days for sure. Over in the discretionary side of things, just like the market, got caught up in quite a bit of selling, starting to see kind of that last week's earnings boon kind of things kind of, whoops, I guess that's not what I was looking for. Kind of starting to separate a little bit. L Brands just continues to tank. I know you trade them, Emily. Hopefully you still are. That is a good thing to do. I know Coach Cody is it seems like Coach Cody's always short on L Brands when I talk to him. And for good reason. Macy's continues to drop. On the other side of things, Costco broke out big time, big spike of volume here today as they opened up their store in China. I guess the headlines, I wasn't there, of course, but the headlines where they had to actually close the store early because it was just a madhouse, I guess. Just went crazy and certainly took Costco's stock with it. So we're starting to see a little separation. I think GPS, another one that kind of got caught up in a little bit of the rally last week, really starting to come back down to earth a little bit. We're still seeing some interesting names on the other side. Still need a little development, but as we look at lows here, we're trying to put in a little bit of a floor. Right, had a big gap on earnings. We've really been kind of drifting back ever since, particularly the last 3 trading days. Still need to see a little development here, but maybe we can set up a pivot on that end. Starbucks just continues. Boy, it has been odd to see Starbucks do this. Generally, Starbucks can go pretty slow, as anybody. I know many of you guys have traded it, so it's not surprising that it's not always going crazy. It's fun when it's always going crazy, right? At least if you're a bull. But really, just continue to hold support. Be stuck in a little bit of a trading range at this point in time. Target another one of those big gap on earnings. Maybe we could get a little bit more. Probably need at least another week though to kind of develop in here for maybe a break beyond if the market's going to be able to rally to the upside. And of course, McDonald's here still got a little bit of resistance and a little bit of turnover. Definitely want to keep an eye on that 50-period moving average. If we kind of pull back into that and see some decent signals, maybe something that we could like. Amazon, of course, the biggest name of the bunch, still hanging on at support, still closing above the 200-day moving average. That's an important support level. Not a lot, not a lot. If that gives out, there's just anything can be support, but there isn't any actual price history until we get back to that pivot down here at 1675 or so. So very interesting. Still an area I do like. The Nasdaq has been the strongest index in my opinion, and this is a big part of the reason why. Starting to see a little more separation after last week's big run on the earnings side. Just so many solid earnings reports. They weren't all great, but we did have some really good ones, and they really kind of propped up the sector overall. Starting to see a little bit of separation, it looks like, in this space. Keep an eye on the low that we set up here on Friday. If that low does give out, probably not unreasonable to think that we're working back to support in that 114 range. Need to see some upward movement, but for what it's worth, we did make a higher high and a higher low today. A big red candle doesn't inspire a lot of confidence, but we did create a higher high and a higher low nonetheless. So we don't really have a lot of resistance. If we do want to run to the upside, there really is some room until we get to resistance, whether we're talking the market as a whole or the discretionary sector in particular here. A little bit of selling didn't hold up quite as well in the real estate sector. Just again, I'm not going to try to mess around with fighting that great trend. Still looking for buying opportunities. Still have one of the REIT, I believe, stock report here because it is a REIT knocking on the door of a breakout. Thought maybe it was going to try here today, but today was not the day. Still a lot of strength, and I do believe that we keep our eyes open for buying opportunities in REITs right now. Why not? Why mess with what's been working? So nothing interesting to say, but we did see some selling off of the highs today over in the REITs and over in the communication services. Pretty ugly candle. We're holding support. We can go ahead and steal this line here. We're holding support. That gives out probably 47 is the next stop, but basically just like the market. We are in the middle. We've got resistance up top. Maybe you could argue that if we take out this resistance right here, there's our bullish signal. Support, of course, pretty a little easier to maybe identify. Uh, Activision Blizzard launched their new game. I don't know if you're out there, D, but if you are, hope you got to play it. Me and my brothers tried, and it was not happening. So, but they gapped up big on that World of Warcraft. See if I can say that. World of Warcraft Classic. For anybody who doesn't know, welcome out, David. Good to see you. World of Warcraft came out like 15 years ago. It's still going strong, but over the years, about every 2 years, they do an expansion, and the game changes dramatically over 15 years, just like about anything would. Well, a lot of us old timers, we really miss the old style of the game. There's been a lot of changes that grumpy old gamers like myself, we still play it a little bit, but we like the old style. It was big. We'll have to see how it plays out, but the initial response from the market was really nice. I saw that they had streamed, I believe, and I didn't see these numbers. I just saw them from somebody else who brought them up. But over on Twitch, which is kind of where the kids watch video games, I don't watch video games, but I guess well over 1 million viewers were watching it last night. Now, part of that might be because none of us could get in to play it. Believe me and my brothers all complain. I have 3 brothers. We all play video games together. We all complained. But a really nice reaction. That's beyond the point. I'm really interested in seeing where this takes us. I believe that this could be a game changer from a from the Blizzard side of things. There's still a lot on the Activision side of things. Got the 200 weekly that we probably need to work. So this is just going into a watch list for me. But after that bad earnings report really gone sideways all year long, maybe if we can start to break to the upside, we can talk about some interesting things. Definitely want to watch that 200 weekly sitting right on top of us. But a good start here today. Over on Take Two, we looked at them yesterday. Saw a little bit of upward movement on the gap on the open, much like the market kind of got caught up in the selling here today. But again, we were able to create a higher and higher low. So I think maybe you could argue, if we're talking pullbacks, if we can take out today's high tomorrow type of stuff, could be a little bit of a confirmation candle that formed here today. So kind of just still in the middle. Nothing really of note in our big names. Google in a little bit of a range right now. Still believe we can look at resistance as a potential break. Got a little bit of support. I certainly think if we give out on that, we might have to change our opinion, but we are continuing to hold up over there. Over in Facebook, a little bit of bearish retracement and a very ugly, gravestone looking candle here today. Now, I don't know. I don't think we ever got confirmation follow through on the break of support. So I don't love that we didn't. If we just would have had one more red candle here and then this happened, could be a little more interested. But I'm just me. Somebody might think this is a great buying opportunity. I'm not one of those people. Quite a bit, certainly an ugly chart here, very much off of the highs, gravestone doji type of a candle, or reverse hammer if you prefer. Not a particularly great look for Facebook, if nothing else. So that's where we find ourselves. Not a lot has changed. We are testing some key levels of support, and whenever during this trade war period, whenever we get close to those edges, to that support, to that resistance, probably not a bad idea to be thinking about breaks in that direction in case that's what happens. Because one of these days, doesn't have to be tomorrow, doesn't have to be this week, doesn't have to be for a while, but one of these days we are going to see a break one way or the other, right? Just, excuse me, just don't know when that is exactly going to be. As we pop over into the VIX, not a lot to see here today. It's kind of a mellower type of day, even though the Bears were pretty much in control all day long. It was a pretty mellow type of control. The dollar, very similar, just not a lot to see here. A little bit of upward movement off of the lows. Again, still bullish, slightly, but I don't think this is a great swing trading environment for the dollar. Needed to mellow out, right? One of these days we'll get a nice upward trend and or a nice clean breakout and we'll work with it. But until then, it's a great place for the intraday players for sure. But for the swing traders, not really the greatest place. Huge follow through on yesterday's break. We looked at that break off of that weekly chart on silver yesterday. You guys have been looking at it without me. A lot of nice upward movement, just tremendous follow through here today. I had 18 as resistance, and silver said, I don't care. That's your first level of resistance. Where do you want to try to take us? Maybe we do have a weekly pivot up here at 18 and a quarter. We do have a swing of old resistance and some old support, I'm sorry, and old resistance closer to 1860. This thing is just a juggernaut right now. You're a bull on silver or you're doing nothing. I would suggest. I think it's probably been the case for a little bit since this craziness back in through here. One day I'm going to go kill some of these lines, but I like to leave them on there because sometimes they play out again. Uh, so you guys can probably tell. Great upward movement. If we're not here, maybe we're looking for some sort of intraday pullback or consolidation period. If we are here, we're probably really happy with where silver is heading. Gold had a good day today too, just not nearly as good as silver. Silver was certainly the biggest winner out there here today, but gold continues to be very strong. Both, gold and silver continue to be bull or bust, at least as far as I'm concerned. Nothing really interesting to say about them other than, wow, they're great. So they're great for the bulls. There's always a bullish market somewhere. Over in Natty Gas, a little bit of indecision kind of here today. We did create that higher low follow through yesterday, so getting a little bit of confirmation off of that low. I believe we can use that low or the trend line, depending on where we are as kind of that next level of support. Still haven't broke. I still believe the very least we need to close above the 50 for any sort of a bullish signal. I think we need to take out our recent high that we put in back in mid-August for a signal to the upside. So we're still in a little bit of a battle, but the bulls continue to show well. If we look at this on a weekly, still battling out at that 9 EMA. So, if we can break through to the upside, we'll catch the 9, we'll catch the 50 on the daily chart. We're still going to have to contend with other things, right? There's a million little things, some bigger than others, as resistance, most notably 250. But one thing that I think you can say is, if we can break to the upside, 250 is a big deal, right? It was a big deal on the way down. I expect it to be a big deal on the way up whenever that happens. Doesn't have to happen anytime soon, but really, other than that 20 weekly moving average, which can be something for sure, we don't really have a lot of resistance in the way. So it's definitely worth keeping an eye on, especially if we're thinking boomerang style or reversal pattern style. Still think we need to break resistance. I'll always say that, whatever I'm looking at, but it's putting up a heck of a fight. And lastly, over on crude, really good bounce back here today. No follow through off of yesterday's candle. I'm going to keep an eye on this trend line as a bearish, but I think right now, as long as we're below this trend line, we have to be skewed to the bearish side. If we break the trend, it's aggressive, but it would be our first bullish signal that we've seen in a little bit. I'll still maintain this is a much better place for day traders and cash flow players than swing traders right now. We're kind of developing a new triangle, right? So we had this one back here that kind of broke and dropped. With the upward movement here today, I think we're kind of developing a new one. So we'll keep an eye on these ranges. A break either way is a signal, in my opinion. Whether it's a tradable signal or not, that'll depend on you. That will depend on me going into tomorrow's inventory report. So, ladies and gentlemen, that will do it for the market recap. Let's see, was there any other stocks wanted to take a quick peek at here today? We looked at FDX here. Let's see. Let's just pop over here, see if anybody else jumping out. We are seeing both of the exchanges breaking, or both of the brokers, Schwab and Ameritrade, breaking to the downside here right now as we kind of speak, knocking right on the door on Charles Schwab. Got a few of our REITs knocking on the door of resistance as well. HCA, a big bearish trigger here today. Pretty fast move once that gave out. That is for sure. We looked at Merck. We looked at Lighthouse. I think we need some development over on our waste management companies, but still have held up, created higher lows on the RSG, held support on waste management. So maybe go into the breakout bin. Quite a bit of downward movement on Boyd here. Many of the casino stocks we certainly showing quite a bit of weakness. Also a little bit of a bull breakout candidate still in play over on EDU. We looked at FedEx. We didn't look at Home Depot. We just need some development, right? We broke out on good earnings, had a good run. Think need a little bit of time. True still also another bullish breakout candidate knocking on the door of some resistance. ACN, another breakout, still knocking very, very close, but not been let in just yet. CDNS knocking on the door of a breakdown. Still believe it could be a K trade, right? We did need to break one way or the other at this point in time. So some interesting things going on in the market. As usual, during these type of conditions, we want to make sure that we're controlling the risk. Don't think we want to get too aggressive on our delta, bullish or bearish. The market's still very volatile while we're stuck in this range. So, it's okay to have a little bit of a bias. I believe it's fine to do so. I have a little bit of a bearish bias personally, but overall, it's much closer to neutral and leaning on the cash flow strategies is, I still believe, the best way to be approaching this market till we get some clarity. We will one of these days. Probably won't be tomorrow, but one of these tomorrows it will be that day, at least from a technical point of view, and that would be a break of support or resistance from a broad market perspective. That likely will trail into the different sector ETFs as well. So, ladies and gentlemen, that'll do it for today. But as always, it is my pleasure. I appreciate everybody's time. One of these days, it's probably not going to be this week because I'm going to have to get it from Amazon. Got to go shopping for a cam, but one day I will be back and I won't just be a voice in the machine. Hopefully everything's running smooth. It appears that it is. I really do like having my giant screen that I usually look at. That is when I usually stream on the laptop and watch the other computer. And because of the recent, most recent technological beating I've taken, had to flip it around. So seeing these big charts is a lot more normal for me. So I do like that. It's going to take a minute to get used to it. We've got the coaches show over at Tackle Trading for all of our pro members here today. So all of you pro members, have a good time over there. And of course, if you're not a pro member, we always invite you, head over to tackletrading.com. We will get you hooked up with a free trial so you can come see all the fun things that we're doing over there. Check those reports, guys and gals. There are things knocking on the door or hit entry points today in both the stock and the options report over on Tackle Trading. So make sure you take a little bit of time to browse through, see if anything interesting has popped up for you. Some things are very, very close to entry points, and some actually hit those triggers here. Add plus rule, of course, this today here as well in both of the reports. So check that out. Of course, you're new around here to the YouTube channel. Certainly welcome. We're grateful to have you. Thanks to everybody who helped us get to 5K. Officially did it, and now we're on to 6 or 16, right? So thank you. We always encourage you to subscribe, hit that notification bell, and of course, join us on our other social media platforms: Facebook, Instagram, and of course, Twitter at Tackle Trading. You can, as always, find me at Frank Martin23 over on Twitter as well. So I'll let you guys get out of here. But as always, guys, thank you so much for your time. Enjoy the coaches show here tonight. Check the futures market, particularly with an eye on the rut. It is knocking on the door of that support level. Let's see what the follow through looks like. But in my mind, at least, that's a very important support level that we need to be keeping an eye out for. So, all right, guys. Well, thank you so much. You guys get out of here. Have a fantastic Tuesday afternoon. And I will see you same time and place tomorrow. Thanks, everybody. Bye now.